Hello and welcome back to Global Value. In today's video, we'll be looking at SiteOne Landscape Supply, ticker symbol SITE, Site. We'll be performing a fundamental stock analysis based on looking at SiteOne's financials to come to a fundamental beginning understanding of the company. So currently, SiteOne is trading at just under $133 per share. Over the past year, their stock price is down about 31.5%. Despite this recent decline, over the past 5 years, SiteOne has returned a 23% compounded annual return, so significantly outpacing the S&P 500. Even though it's down quite a bit, it's still a $6 billion business. So let's learn more about the business. SiteOne Landscape Supply Inc. is one of the largest wholesale distribution companies of landscape supplies in the United States and Canada. The company serves various businesses, which include wholesale irrigation, outdoor lighting, nursery, landscape supplies, grass seeds and fertilizers, turf protection products, turf care and equipment, and golf course accessories for green industry professionals, mainly in the US and Canada. The company provides a selection of approximately 135,000 stock keeping units. Its product portfolio includes irrigation supplies, fertilizer and herbicides, landscape accessories, nursery goods, natural stones and blocks, outdoor lighting, and ice melt products and other products. It markets its products primarily to residential and commercial landscape professionals who specialize in the design, installation, and maintenance of lawns, gardens, golf courses, and other outdoor spaces through its branch network and district distribution. As of January 2nd, 2022, the company had approximately 590 branches in 45 U.S. states and 6 Canadian provinces. SiteOne Landscape Supply was incorporated in 2013 and is headquartered in Roswell, Georgia. So it's amazing, but this is one of those unsexy businesses that is still a $6 billion company. So with that background, let's get right into our fundamental analysis. We'll be performing an 8-pillar analysis to look at SiteOne's financials and come to a beginning understanding about the company. Pillar number 1, we want their average 5-year PE to be below 22.5. So their current PE is 23, and over the past 5 years, they've averaged a PE that's been about double that at about 47. So to start off, pillar 1 is going to be an X. Pillar number 2, we want their average 5-year return on capital to be above 9%. So we can see that SiteOne has done a good job of keeping their returns on capital to be in these low double digits. So their return on capital has grown over the past 3 years, and over 5 years, it's averaged out at over 13%. So pillar number 2 is our first check. Currently, their return on capital is about 19%. So over the long run, a stock is going to return approximately what its underlying business returns, and returns on capital are going to be those business returns. So it's good to see that they get above average returns on capital. Pillar number 3, we want to see 5-year revenue growth. So they've nearly doubled revenues from $1.8 billion in 2017 to nearly $3.5 billion in 2021. So this is a check on pillar number 3. Pillar number 4, we want to see 5-year net income growth. Here they've more than quadrupled net income. In 2017, they had about $54 million of net income, and they increased this to nearly $240 million in 2021. So another check on pillar number 4. Next, we're looking at their shares outstanding. We don't want any business to be diluting shareholders and silently killing long-term investors. So we're looking for decreasing shares outstanding. In 2017, they had 42 million shares outstanding, and they did dilute investors. They increased this to about 46 million shares outstanding in 2022. So over 5 years, that's about a 7% dilution total. So it's not terrible, but we don't really like to see it. Depending on some of these multiples that the business was trading at, maybe it wasn't that bad if they were able to issue shares when they were trading for above intrinsic value. Overall, we prefer businesses that are keeping shares stable during times where the business is more richly valued and buying back shares when the business is undervalued. So this is an X on pillar number 5. So pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures, and it's the green column here. In 2017, they had about $1.8 million of free cash flow, and they grew this a ton to $178 million of free cash flow in 2021. So that's a huge check on pillar number 6. Averaged out over the last 5 years, they've done about $113 million a year in free cash flow. So we'll use that to determine how the business is utilizing leverage and how their market cap compares to their current free cash flow yields. So pillar number 7, we want their net debt, which is long and short-term liabilities minus cash and cash equivalents, to be below their average 5-year free cash flow multiplied by 5. Currently, after subtracting their cash and equivalents, they have net debt of $555 million. Multiplying $113 million of average free cash flow times 5 brings us to $565 million. So we're just barely comfortable with their ability to pay off their liabilities. Pillar number 7 is another check. Finally, the big pillar of them all, pillar number 8, we want their market cap to be below their average 5-year free cash flow multiplied by 20. So currently they have about a $6 billion market cap. Multiplying their average 5-year free cash flow of $113 million a year times 20 brings us to about $2.2 billion. So that's well short of their current market cap. So that's an X on our second valuation pillar, pillar number 8. So in summary, SiteOne checks the box on 5 out of 8 pillars. They're a strong, growing business, but they're off on our valuation pillars. They have a higher PE than we're comfortable with. They're slightly diluting shareholders, and their market cap is higher than what their free cash flow profile supports. They seem like they have a relatively straightforward business model. My advice here is to learn more about the business, stay up to date by reading their annual reports and some of their earnings. And if you find that you do like the business, just be patient. Most businesses eventually trade for prices that are well below their intrinsic value. If you're patient on a boring old school business like this, chances are you'll be rewarded for it in the long run. So stay patient, wait for that valuation to come more in line with providing a sufficient margin of safety, and things should go pretty well. So this type of analysis is just a starting point, and it's not any sort of recommendation to go off and buy the stock. You got to do your own homework and come to your own understanding about the business. Well, guys, that's it for today's stock analysis analyzing SiteOne Landscape Supply, ticker symbol SITE. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about SiteOne, and have a great day.